The government has now handed down its mid-year economic and fiscal outlook. We had the Treasurer, Jim Chalmers, and I don't know that he should have been smiling through his media conference, spinning what seems to be a web of slogans and catchphrases. Have a look.
Responsible economic management, it's what puts downward pressure on inflation and eases the cost of living. And because of our efforts, we are getting the budget in much better nick and making more room for our priorities, and that's what these numbers that we are releasing today show. Our government's economic plan is at its core about three things: easing cost of living pressures, repairing the budget, and investing in the foundations of growth in our economy.
Well, I didn't hear much about easing cost of living pressures, I must say. The reality is that Australia, of course, is in probably a per capita recession. Households are in a lot of pain as we get toward Christmas. Inflation is still very high, despite those 13 rate increases. Joining me now is Sky News Business Editor Ross Greenwood. Ross, you know this stuff much better than me. Is it naive to have expected any sort of financial relief for Australian taxpayers from today?
I think it probably is, because it's probably not the time that the government wants to do it. It probably wants to do it closer to an election or closer to the budget next year. And also, it's got time to have a little bit of a look to see just whether inflation, which is moderating now, is going to come down much. But you're right, families are hurting. And the problem is, in many ways, that this particular budget shows that if the government had gone out and spent earlier, it probably would have only added to inflation, which therefore would have probably left interest rates higher for longer, or indeed higher than what they are now. And that's something they simply couldn't have chanced. And that's partly what the Treasurer was saying today, that if they had not taken the action that they had done and really banked a lot of the money that's coming through from PAYE taxpayers right now, that ultimately they'd be right now facing higher interest rates, and Australia would have been facing the prospect economically of a much harder economic landing as well.
That, cash that's pouring into Treasury from income tax takes from Australians, the estimates from Treasury on what that would be were way out. Is that a concern?
Yeah, well, that's because they underestimated where the unemployment rate would be, just how low it would go and how long it would stay there. And so if we go through some of the numbers here, you can even see now that the government is more pessimistic about where unemployment lands as compared with the Reserve Bank. It says broadly it's going to be between 1.25% higher over the next couple of years. Now, the reality is, when you actually come down and look at that in the number of people who will be out of work. Now, first off, June 30 next year, it's around 80,000 people more than today out of work. Now, if you think there's economic hurt right now, then if you put 80,000 people out of the workforce, and that's all other things being equal, including no more migration, all that type of thing, but if it's 80,000 more people, then there is significant hurt when people can't pay mortgages, when they can't pay their bills. But then you go out to the following year and you get the more than 110,000 people at that time who'll be out of work by that time. So, what really you're seeing is that the pain that you might be feeling right now is only just starting as a result of these rate rises. And that's the reason why the government needs to basically keep some money up its sleeve, and even potentially those stage 3 tax cuts, to make certain that there is some genuine relief coming down the track for those people who lose jobs over the next 12 to 18 months or so.
Ross, I saw you highlight some discretionary spending figures today, which shows that discretionary spending has basically collapsed. Now, when you look at that, and you can understand it with, high petrol prices and the cost of food and electricity and gas, but that must be having a major impact on small business, particularly retail. Are we going to see post-Christmas and into the next year a lot of businesses, medium and small, falling over?
Almost certainly. There's little doubt about that. And though they might have had something of a windfall during that Black Friday sales, where the sales that's reported to us were much stronger than last year, going into Christmas, things do look a bit weaker. And you can see the consumer confidence is at its lowest level it's been in decades. So that being the case, people are not prepared to spend. Now, they've got to spend on essentials. There's no doubt they'll keep on trying to keep the lights on, do all that sort of stuff. But it is going to be the discretionary spending that comes into question into the new year, and especially as some people start to get worried about jobs. The problem, as you point out, if small business is going to the wall, then people are losing jobs. If people are losing jobs, then people are not being able to keep up with mortgages and other bills that they might have. And so the real issue is, even though the government is forecasting a very wafer-thin deficit of $1.1 billion, it's a rounding error, really. It could be in surplus, if they'd been able to find an extra coin down the back of the couch. The truth is that by the middle of next year and beyond, they're going to need every dollar that they can get because, A, they're not going to be getting as much money through from the PAYG taxpayers, who represent now almost half of all the money they get. But then secondly, they're going to have to be paying out unemployment benefits to people who need to go on welfare as they lose jobs. And that really, if you like, is the worst recipe for any government. And that's what Jim Chalmers is going to be facing by by this time next year. And certainly by that time, there's going to be talk about falling interest rates, not rising interest rates.
Is there a definition of discretionary spending? The reason I ask that rather odd question is, you fly on a plane and it's full domestically. You go out to a pub or a restaurant, you can barely get in and get a booking. People seem to be out spending money on that sort of thing. What are they not spending money on? I mean, we're talking furniture retailers, white goods, the Jerry Harveys of this world, the people selling lounge suites. What is it?
It's that. There's no doubt. It's some of that discretionary spending on white goods, electronic gear and stuff like that. But rather than trying to think about it of categories that people are spending on or not spending on, think about the people or the community as being like an onion. So at the very heart, the very core, people who are very wealthy are still spending up on big mansions. They're still spending up on luxury goods. Luxury goods sales are very strong in Australia right now. The problem is when you get out towards the core, in other words, almost to the edge of our suburbs in our capital cities, it's where people have only one job and they're trying to support a family. It's where they've suddenly found themselves after all these rate rises, plus the rise in their energy prices, plus the rise in their supermarket bills, that they're the ones who are genuinely hanging on, and especially those people who have bought homes over the past 2 or 3 years and taken on relatively very big mortgages compared with their wages. Now, even though they're the outer layer of the onion, you can't discard them. You can't just let them go because, as I say, it really is very much not even a two-speed economy. It's a multi-layered economy right now. But at the very heart, there's still people out there spending and consuming. And oddly enough, those people are still driving up inflation, which the people at the outer edges are feeling most acutely when it comes to the rate rises and their own cost of living. And they're the people who are also vulnerable to losing jobs and therefore really becoming a catastrophe for property markets and for the Australian economy.
Just finally and quickly, what's your view on the fuel excise argument about how the government could have, over the next 6-month period, knocked a bit of that excise off and made petrol a bit cheaper?
I think that's a fallacy. The oil price is coming down anyway as it is. And so from that point of view, petrol prices will come down so long as the government can make certain that there's enough competition between the oil companies. When you've got oil today in the 60s, when it was at one stage up close to $90 just only about a month and a half ago, those petrol prices are going to come down. The government doesn't need to do it because politically, if you take it off at some stage in the future, you might just have to put it back on again. And that politically does not suit anybody. So that's the reason why I'd suggest that the government right now is going to resist those calls and let the markets do its jobs.
Ross Greenwood, thank you very much for your time. It's always a pleasure, mate. Thanks.
Good on you, Steve.